What is going on, Benzinga Nation? We are doing what Drake would call a back-to-back. We've got Sami Abusaad from T3 Live coming to hang out with us again. Yesterday, if you joined the stream on live trading, he had some great call-outs. One of them for me was FedEx. Now, look, at home, I don't really carry Benjamins, but he made me a bunch of money, maybe about $300 on the FedEx calls. I got to take some call options, and that was a beautiful thing. The man trades shares, which is amazing to see when it comes to earnings season. And that's exactly why we're doing this webinar, because earnings season is going to kick off in the second half of July. There's so many companies that are going to be reporting, right? What was it? Used to be like the FANG companies and the Magnificent Seven and whatever their nicknames come up in the stock market. This is a webinar where you're going to learn insights on what strategies he uses. And of course, if you want to continuously get those updates every single morning, there are a few packages that we have to offer. You'll see the websites and you'll see everything else that we have to offer here as well. But Sami, give me a thumbs up when you are ready to go, my man, and we will get rocking and rolling. Sami Abusaad, what is going on? I'd ship you the money via FedEx, but I'd like to keep it.
Good to be back. I enjoyed yesterday very much. Yeah, good to be back. I'm looking forward to today's because this is my favorite strategy, actually.
Awesome. And then just, let's go. I know you got the slides up, so let's go ahead and kind of just give a sneak peek, I guess, a preview of what it is that you do. I didn't know you were an accountant.
I was.
Tell me a little bit about this.
So we're live?
You are live. Everyone's watching you. Say hello to whoever you want in the world.
Hi, everybody. Really good to be with you today. I am really excited about this. I am going to share with you something that I discovered on my own. Nobody's ever taught me this. You're never going to see this strategy anywhere else unless other people start copying me. But it's truly near and dear because it's something that I discovered on my own. And it's truly my favorite strategy that I do almost every day these days, because I trade earnings the whole year. But during 4 times a year, like we have a 6-week window. So from January through February, from April through May, July through August, and October, mid-October through the end of November, those 6-week periods, it's like endless opportunities. But I do trade earnings throughout the year, almost on a daily basis. I take something. But during those 6-week periods, I may take a dozen plays a day. So a little bit about myself. I worked for KPMG, which is a Big Four accounting firm, for 4 years, and as a CPA, as a senior auditor, until I saved enough money to quit and go full-time as a trader. Started part-time in 2004, went full-time in 2007 with $16,000 that I had saved from work. I actually saved 20, and I deposited 16 in a TD Ameritrade account. And I kept 4,000 for living expenses. Grew the account to about 50,000 in 6 months. And my older brother at the time was amazed with the results. And he said, if you can make that kind of money through buy and hold, imagine how much more you could make by trading, by actively trading. And he was mostly referring to things on the highest symbols on the highest gainers, highest losers, biggest losers list. And so I started to day trade, and I gave back the 50,000 plus $15,000 more in less than 3 months. So that's when I realized I didn't quite know as much as I thought I did, that being an accountant didn't really help me much at all. And that's when I started scouring the internet for trading resources, and started spending a lot of time trying to learn how to trade. Today, obviously, I trade full-time, been doing it full-time part-time for 20 years, full-time for 17 years now.
Yeah.
I'm definitely aging myself here, but but I trade full-time, and and people say, why do you teach? Because I have made millions in the stock market, and I'm not bragging or anything like that, because it's my calling. It's something that's very fulfilling to me, something that I enjoy. So that's why I also teach people how to trade and become financially independent.
What I love, and what I love real quick, I want to say, and I told the viewers from live trading that one of the things that, obviously, look, as a sponsored show, we make it very transparent what we're here to do. We're here to show, hey, here is what Sami does. And if you want to get more insights from him, here's a package that's available. We'll go over all that, by the way, here, throughout the presentation. But it's the transparency that you'll show here in these decks as well. You show the money that you've made in your broker from 5 years ago. There's some trades that you'll talk about that you made money from in just a couple of months ago, earlier this year, last year, whatever the case is. So the transparency, I think, is great. And but anyway, lawyers, of course, we got to have that disclaimer there as well.
Exactly. So this is, a disclaimer to let you know trading is risky and that this is just for educational purposes only. Okay, it's not a recommendation to buy or sell anything. All right. So there are 3 ways to trade earnings season, and I don't know if you know what they are, but you should. The first one is called Guerilla trading, where you enter the day before the company reports. That's the riskiest because you don't know what is going to be reported. You don't know what they're going to say on the earnings call.
Yeah.
Day trading, which is what we did together yesterday. You wait for the company to report. The stock usually gaps, and you trade the gap. And I do that every single day. I did that the first 15 minutes, first 20 minutes before coming on this morning.
Yeah.
I mentioned the Elan short, which fell apart and got halted, and the WBA short, which fell apart also. So I did a couple of trades just before coming on the show. That's day trading. The third part is swing trading, where you wait so the stock gaps and then sets up on the daily chart, and you take a swing trade after the daily gap. So 56% of all my trades are off of the gaps after the gap. So you get the gap, you get the little base, you play it long. Notice, gap up, clears the resistance, and then pulls back a little bit to the 200 MA, and then boom, long. This is called swing trading. I'm actually not here to cover that, but this is one of my favorite strategies also for swing trades. And like I said, over 50% of all my trades happen after the gap, basically. Sometimes when the gap is, when the stock is down a lot and then you get a big gap on high volume, that's an exhaustion gap. Like it sets the bottom for a long time to come. As you can see, just amazing moves. And that's when people actually get shaken out of it. They think, oh, it's, the stock is going to zero, and then it's actually the bottom. Usually it's the bottom, okay? So those are just some examples, but that's not actually what I'm here to talk about. What I'm here to talk about is guerrilla trading, which is entering before the company even reports. This is the absolute truth. I truly never planned to share this strategy ever, because I was afraid I discovered something that's revolutionary, which it is. I'll show you that, once the word gets out, everybody would start doing it and it would lose its efficacy, right? Its effectiveness. But then in 2017, I launched a new program at T3. T3 Live acquired Pristine, which is where I started trading in 2016. Like I think February 2016 is when we closed the deal. Okay. Yeah. And so in 2017, T3 Live wanted me to launch this swing trading program called Nightly Game Plan. And part of the Nightly Game Plan is every week I did a video for the subscribers and went over the results for the week, and then at the end of the month for the whole month. And so I did this video, and there's the link for you if you want to check it out, or just Google Nightly Game Plan. At the time it was called Nightly Game Plan. Now we call it Strategic Swing Trader. And T3 noticed that in 1 month, I made $78,000 net after commissions. And I was logging on to my account live. That's E-Trade, 66 with E-Trade, the same month, and then 11,600 with Ameritrade. When they noticed that, they said, and they noticed it's a strategy that they've never heard of before. They said, we gotta, you gotta write a course about this. You gotta start teaching this separately from everything else, because it's a separate strategy. Then I started doing these videos. Here's the link for this video if you want to. Sorry about the low quality picture there. low resolution picture, but there's the link for it if you want to look it up, or there's the title for the video. It's on YouTube.
Yeah.
There's that video.
We just shared that in the chat. And so as you go through the videos, I'll share them in the chat.
Yeah. So I started to do these videos, and T3 was blown away. And in 2019, I took this strategy to a whole new level. Here's 1 month in 2019. This is the best month, of course. I'm showcasing the best month. Just 1 month worth of trading, and that's $300,000 worth of P&Ls in 1 month. Okay, these are real P&Ls. Now, I'm showing you just this is I had 2 accounts, so this is actually 31,000 in 1 day. So, but this is not to this is not to tell you, I always get it right. I don't. The truth is I don't. This is my second best day ever. These are all, you see how the position is 0? Because those were all earnings plays that I closed out of at the open.
Right.
So this is second best day ever, I think. But anyways, this is like 1 month, $300,000 worth of income from just one strategy. Actually, 2019 for me was a crummy year. The first 2 months I made like $86,000, and then I spent the rest of the year struggling in my day trading account. But luckily, the earnings strategy that year was phenomenal. Okay, so here's the backstory. Here's really truly what happened. Around 2010 or so, so I'm on the West Coast, so the market closes at 1 p.m.
Yeah.
I have no kids, no wife, so I had all the time in the world to spend after the close looking at charts. So I would pore over the charts after the close every day, and then around 2010 or so, I started noticing certain patterns that preceded most gaps that I came across the next day. Like when the stock gapped up, I'm like, I noticed something the day before while I was scanning the daily charts.
Yeah.
So that's what happened around 20. At first, I thought, I must be making this up. So I ignored it. Spent the next 7 years looking into it and studying it. And it came to be called the earnings strategy or the earnings play. But the reason why I didn't trade it, even though I noticed until 2017, I didn't start trading strategy until 2017. Every other strategy that I do now started trading, in 2007 or 2005.
Yeah.
So a long time ago. This is the only strategy that I only started trading in 2017. And the reason being is I'm not a gambler. I don't like to gamble. You put me in Vegas, I'll just go to the shows and, check out some cool hotels and resorts. But I will never gamble because I don't like gambling. I don't enjoy it. Okay. So I didn't want to gamble. Getting into the stock before the company reports, you're gambling basically, because you never know what they end up saying. What if the company issues blowout earnings, but at the same time the CEO says I have cancer and I'm stepping down, and he means everything to the company, right? Never know.
Yeah.
So
and I'm glad you mentioned that, because I think that's where risk management comes in. So many times, and we've seen this in the FinTwit world, where it's like you get FOMO because you see screenshots of like, oh, I made $10,000 because I had all these shares or I had all these options or whatever. But like one thing that I had contracts in snow just a couple of quarters ago. The CEO stepped down, stock straight up. Doesn't matter how great the quarter is. A CEO randomly resigns, downside. I ate ramen that day. You know what I mean? So like, you're absolutely right. It happens. You have to kind of have risk management, whether it's in poker, sports betting, trading, whatever. You got to have risk management because you got to live to fight another day.
Exactly. And initially, when it's a new strategy, you don't know how to share size. You don't know how to manage it. So it took me a little while to really get the hang of it. That's why I didn't really take off until 2019. Yeah. I traded it the first 2 years, but it wasn't as good because I was just learning. It's a new strategy. This is the thing about trading in general, actually. We start trading, we think we're going to make money tomorrow. When I first started, when I went full-time in 2007, I thought, and I told my siblings, I have 3 siblings, because I was walking away from a really amazing career. I told them, in 3 months, I should be good. That's unrealistic. Yeah. Name one profession where in 3 months, you're at the top of your class.
Yeah.
it's unrealistic, but that's what we think. And so it took me a couple of years until I took off with this strategy, at least.
Yeah.
So on the downside, I missed out on a lot of money by not trading it for 7 years after noticing that pattern.
Yeah.
On the upside, gave me the confirmation that the strategy works. It's made money in all types of markets. Okay. Here's my big aha moment. I started to think, first, what's the common catalyst behind all these gaps that I'm seeing? Okay. And more importantly, can I be in the stock before the gap even happens, before the stock gaps? Okay.
Yeah.
Can I capture that gap? I was taught to trade the gap after the stock report, the company reports, but can I actually be in it before the company even reports? That's what I started to think. And I discovered that the main reason why stocks were gapping was because they were reporting earnings. Okay. So it was due to earnings. And then came the most important question of my life, my career, which is, can I use the atom or the basic unit to trade earnings? The atom is what the whole Pristine method, which is what I trade for a living, is based on. And so the picture you see to the right is the only complete movement a stock or the market can make. There's no other movement possible. It's true, there isn't. The entire life of a stock and or the market is comprised of this cycle repeated time and time again. It's like a wave in the ocean. So that's what it is. The cycle forms the basis for one's ability to predict future price movements based on the laws of psychology and probability. The cycle, sometimes referred to as the basic unit, helps the trader know the current status of the stock or the market as well as what's likely to occur next. The key to trading successfully is knowing where you are, where the stock is in its cycle. Because the cycle is comprised of 4 distinct stages, which in turn are ruled by 4 distinct emotions. So let me show you what a real chart looks like. You see it? So sideways, then breaks out, then tops out, when greed becomes extreme, and then fear kicks in. And when fear becomes panic, the stock bottoms usually. That's what it looks like. Sometimes the stock might not go all the way back down, and that's the Apples of the world, the Walmarts of the world. They don't go all the way back down, so you end up with higher highs, higher lows, and we call that an uptrend. Okay, but that's the cycle. Stocks don't go up in a straight line. When they do, they eventually fall back, but they go up and down, which is what makes trading hard, by the way, because you have to time your entry. If you get in at the top, you're going to lose money. You're going to start losing money. You get out, and then eventually it might go higher, but you'll be out of it. Yeah. So this is how stocks move, up and down, all the time, okay? So, and that's what I know how to trade. So this is the cycle that I trade every day. Day trade, swing trade, everything. So I was like, can I use the earnings strategy or the earnings play that I just discovered? Can I trade it based off of this? Which is the only thing that I know how to trade. And it turns out I could. So if you believe that this is how stocks move, and I'm telling you, this is the truth, this is how stocks move in a cycle, in a wave, okay? Then by looking at this chart, you should already know where you should get in here on the breakout. While the stock is moving up, we know that stocks correct through time or price by either pulling back or by basing, and then you get the base breakout. So you can play long even after the breakout. The best place to get in on the breakout, right? And then when stock tops out, you can look to go short. This is stage 4. It's the same as stage 2. So you look to play short on counter rallies and base breakdowns on the smaller time frame. I'm showing you the monthly chart because the monthly chart shows the whole cycle more clearly. But you can do it off of the daily, the weekly. So we know how to play it. Here we call that the transition A breakout. On the way up, again, it doesn't go up in a straight line. It goes up in a zigzag fashion. So you play the pullbacks, you play the breakouts. That's stage 2. When it tops out, you can play the climactic sell setup here. This is transition C is the same as transition A, but to the downside, you play the breakdown. Stage 4 is the same as stage 2. You play the counter rallies short instead of playing the pullbacks long. And then the breakdown short. And transition D is the same as transition B. You play the climactic buy setup long. So this is how I normally play any strategy. Any stock is based on the basic unit, and I figured out a way to trade the earnings strategy using the basic unit. Now, again, T3 tasked me with writing a course, and it's called the Earnings Engine. It's actually, you can purchase it. So to do that, I analyzed over 1,000 earnings gaps, narrowed down the system to 6 patterns that repeated, and each has a specific criteria and checklist. The average earning season gives me over 200 trades. So, every quarter there's a 6-week window where I have 200 trades that I can take at least. Yeah. So it's an amazing strategy with a lot of opportunities. And these are the 6 patterns, right? Transition A breakout, whatever. I'm going to go over them with you quickly. Now, of course, this is just, I'm not spending as much time as I would if I didn't have that limitation, that, but yeah. I gotta do it. So quickly, this is the transition A breakout. Okay. So here's what it is. Here's what it looks like. The stock basically, remember I told you stocks usually bottom after a big gap down because people finally panic out of the stock. But the point is, the way to know the stock is bottomed or is bottoming is, this is the 20 MA, this is the 200 MA, okay? For reference on all my charts, that's what you're gonna see, the red and the blue line. So while the stock is in a stage 4 downtrend, it's gonna be under that declining 20 MA, the blue line, okay? Mm-hmm. When it bottoms, the 20 MA will start to flatten out and start to point up. That's how you know the stock is starting to transition to the upside. It's starting to break out. So while I'm scanning the earnings calendar, I'm going to look for stocks that are transitioning. But not only that, I'm also going to look for stocks that have a red bar the day before earnings. It's important. Why? Because if the stock has a red bar the day before earnings, it means that investors are bearish on it. Or, in other words, it means investors are not expecting a positive outcome. So the expectations are low. So imagine, this is the Michael Jordan of stocks, but people are not, they think it's Sami Abusaad of stocks, meaning, you see what I mean? They have low expectations for it. So any like, and if the announcement is positive or the company just simply meets expectations or doesn't miss by a lot, it should result in a gap up because the bar is set very low. So I look for stocks that are transitioning, that have a red bar or multiple red bars the day before earnings, that is also at or near the rising 20, because I don't want it to be extended. I don't want it to be overbought. So those are kind of the 3 main items that I look for.
An example real quick that I have is of Tesla. I think Tesla, it was either their last one or their second to last one that they reported. It was this year though, where, the stock was at maybe around like 150, 160 or so. It was just beaten down, right? Everyone talked about how the SPY's going up, Tesla's down, this is over. They got to report a killer thing. They got to do this, they got to do that. The earnings were kind of like, yeah, some people would even say the earnings were bad, but it was kind of like the stock was so beaten that they're like, all right, cool. You didn't kill humanity, the stock's going to go up. You know what I mean? He mentioned a couple things on AI and robots, all that stuff. And then it just kind of popped.
Exactly. So it's what drives stocks is not their true intrinsic value. It's mostly the expectations on the street. If the expectations are really low, the stock can easily rip, even though it could be a garbage company. It could be like nothing.
Yeah.
So I look for stocks that have low expectations. How do I know they're low? Because people sold it the day before earnings. Would you sell it if you expect it? If you're an investor or a trader, would you sell it the day before it's reported? If you thought it was going to gap up, if you thought the result was going to be good, you wouldn't. So you see what I mean? So that's the idea, is I'm looking for stocks that are transitioning, that have low expectations, and that are not extended, that are not overbought. And so some people would refer to this as inverted head and shoulders. I don't care. I just know that the 20 MA is starting to flatten out and the stock is bottoming the day before earnings, prints a red bar in the area of the 20. I like it to stay above the 20, generally speaking, but in the area of the 20, the next day gaps up. This is TMO. Okay. So this is the first strategy. I'm looking for stocks that are bottoming the day before earnings with a red bar at the 20. Boom. And then I get in at the close. I don't even try to time my entry during the day. I just get in at the close. I actually submit a CLO order, which is fills you at the closing price, or it's called a market on close, MOC order, depending on what platform you use. Fills
Yeah.
me exactly right at the close, and then I just carry it overnight. The next day, you could sell it at the open or manage it. There is a management method that I also had to come up to figure out, so that when the stock is a small gap and it moves up, I'm not getting out at the bottom or at the open. Like these are like this is a small gap, but if
Yeah.
you held it, you could have doubled or tripled maybe what you would have made if you had just sold it at the open. So
Yeah.
is there a way to manage it after the stock opens? Yes, there is. So I had to figure that out. Took some time. Took some time.
Yeah.
But
I'm gonna ask you a question here.
yeah,
These plays that you're kind of going over, right? And we've kind of talked about this from the top as well, and it looks like you've got a few more patterns from the deck that I saw to go over. But these plays that you're talking about, and I know you had kind of probably provided some commentary on Micron and things like that. Are you communicating this in your newsletter? Is that the how do people know about what you're thinking?
yeah. So every day before the close, I mean way before the close, I send out a newsletter. So in the
Okay.
morning, I send out a newsletter with the regular swings for the day and updated stops on the open positions.
Yeah.
And then around 3 o'clock, I send out another newsletter with the earnings picks, with the ones that I'm picking to play for the night, for the day. So that's how people find out about it. And then on Monday, we do coaching and then go over the plays basically. Does that
Gotcha.
make sense?
That makes perfect sense. And I just want to take a quick minute. If you guys are interested, again, we're going to keep going over the patterns and keep talking about the different things. But if you want to take advantage of this, we've got this Benzinga special package deal. You can go to t3live.com/deal. You see on the graphic on the right-hand side everything that you get. I think Amber mentioned that you also have, another insight coming up on, I believe it's July. I'll take a look at the date there, but you've got the newsletter, Training the Pristine Method as well. And then you also get the weekly coaching sessions with that. And then, of course, you've got, thank you for that, the 6 proven patterns, and kind of you go more in depth and the appetizer that you're kind of giving us right now. Thank you, Amber and Aaron, for pointing that out. But make sure you guys take advantage of that. We'll continue rolling, but just want to remind the folks, if you want more of this, you go to t3live.com/deal. All right. What is pattern C? And I want the chat to know, I promise you, we can go ABC, but I'm sure there's a reason you've gone from A to C. I saw B comes later on, but talk to me about the transition C.
Okay, so thank you. I appreciate it. So basically, the transition C is the opposite of transition A. The stock is not bottoming, but it's topping. That's why I went from A to C, because C is the mirror image of A, but in the opposite direction. You see how the stock is topping, is rolling over.
Mm-hmm.
So it was in a stage 4 uptrend and it's starting to roll over. So I want a green bar. A doji bar is good too at the declining 20, and then I want to take it short into earnings. Stock is rolling over. Investors are bullish on it when it's actually rolling over. 20% gap, but is there a way to get out to manage it so that you don't get out of it at the top? And then this was a 20% gap. If you held it all the way to the top, it became a 5% gap in your favor.
Yeah.
So you have to figure out a way to also manage it. But that's why I went from A to C. So it's a good point. Okay, so that's transition C. Now B and D is when the stock is basically either running up into resistance or trend line resistance, or falling hard into support. So those are the same, but in long and short. So this is actually Cisco, the food stock, SYY, runs up for 4 months into weekly resistance, into earnings. So the expectations were way too high, and it was running up into resistance, extended on daily chart. That's a short. Running up into trend line resistance on a bear stock. So investors are bullish on a bear stock. That's a short into earnings. You see what I mean?
Yeah.
So the idea is you pretty much do the opposite of what most people are expecting. That's what I'm doing. I'm mostly doing the opposite, but I'm not doing it on, I'm not trying to short strong stocks. I'm shorting stocks that are either topping out or that are really weak, but investors are bullish on them. Okay.
Mm-hmm.
So this stock was actually just turning the corner, like just starting to break out, and then fell really hard into earnings. That's a long, not a short. You want to know what symbol this is? This is WWE. It went to $85 after this gap. And
how that stock is still active, I have no idea. How that, I don't know. Great job to WWE. Side note, love it.
So anyways, that's the idea. That's transition B. This is one of my favorite patterns. and it's called the unfilled gap. So the idea behind it is it's the same thing. You're looking for a weak stock that investors are bullish on ahead of earnings, but has an unfilled gap. You see that the unfilled gap is that hole that you see in the chart where the stock wasn't able to rally back up into that area. That tells you there's something wrong with it. It gapped down and didn't get bought at all, stayed weak. So, and then 4 green bars up into resistance, into earnings, I'm shorting that stock. Yeah. Now, again, I don't get it right all the time. I get it wrong quite often too, but I've also figured out a way to manage so that if I get it wrong, I'm not going to get hurt that bad. And then in the long run, this strategy, I believe, made more money than any and all strategies combined, like maybe more than all of my other strategies combined for the same time period. So it's truly my favorite strategy. This is Columbia Sports. I don't know, 11 green bars in a row into
That's insane.
Into all that resistance with an unfilled gap above. Oh my God, that's like I'm shorting that every day, twice on Sunday if I could. This is
can you go back? Can you go? Yeah. So this one here, you tell me what you think about this one. I've always heard, yesterday we talked about how, look, the bars tell a story. They tell the human psychology of things. And to me, that big red candle right there is, hey, everyone that was losing money but didn't sell, they were waiting to come back and break even. And then they would get out and say, you know what? Whew, I broke even. I'm out. I don't want to deal with the stress anymore. And therefore, you might get more resistance because of the human psychology of, boy, I was down 20%. I'm just happy to be break even. I'm okay. I'm getting out of here ASAP.
100%. And then the next day, the stock gaps from 37 to 32. That's $5, almost 20%.
Yeah.
So it's just this is what you want to do short into earnings.
Yeah.
It just is. Okay.
I know you're a big guy. I know. Sorry, and I just want to continue providing value on what Sami is thinking when he's kind of trading these setups. And I know you and I talked about stop losses, and we just talked about managing risk as well. We know we don't go crazy on a position, right? Because if my best philosophy, even when I sports bet, is if I'm checking the score of a game a little too much, if I'm checking a stock a little too much, I've risked too much, right? That's how I know that I've kind of increased more than my appetite can kind of handle. How do you determine your stop? How do you kind of handle your risk?
There's no way to know in advance how much the stock is going to gap.
Right.
But here's what I know. I have over 5,300 gaps tracked, earnings gaps tracked since 2017. Every call that I make publicly, that I send out to subscribers, is tracked. So every single one of them. So I know that the average gap is 6%. It's actually 6.3%. So I know that on average, my risk is only 6%, 6.3 on average. Sometimes, the stock will go against me by 1%, sometimes by 20. But I know on average is 6%. If you know that it's 6%, now you know how to share size because you know your risk is 6%. So if you wanted to do, 100 shares, $100 risk, then you take $100 divided by 6%, which would give you $6,600 worth of shares that you have to buy.
Yeah.
So now I go over the detail and the math in the earnings engine seminar.
Right.
This is not the time to do it because it doesn't get complicated, but you have to follow along and see how the calculation is done.
Yeah.
So, but that's how I know how to share size, because I know that the average gap is 6.3%. So on average, I know what I'm risking.
Awesome.
Okay, this is the fifth pattern, and it's called the pullback, and it's like the staple pattern. This is the main pattern because it's not easy to find stocks that are transitioning or topping out, and that's what the transition A, B, C, and D are. You're trying to find stocks that are either bottoming out or topping out. That's not the vast majority are going to be trending up or trending down. They're not. They've already bottomed or topped out a long time ago. Yeah. So this is the main pattern actually. And the idea behind it is I want to find a strong stock, really strong stock with weak expectations, low expectations amongst the investors that's at or near the 20 MA. That's it. Simple as it gets. Yeah. So the day before earnings, I get in it, and then I'm expecting a gap up. So, but that's basically what it is. Strong stock that's pulled back to the 20. the day before earnings. And these are like picture perfect patterns, to tell you the truth. They don't all, I can't always find picture perfect plays, but the beautiful thing about earnings season is that you have so many companies reporting every single day. Like some days we have 400 companies reporting. Can you find a few, like 2, 3, 4, 5 good ones out of 400? You sure can, most days. Okay. Whereas the rest of the year, you can still find good plays here and there, but the list is very small. It's not that you have to pick from, so it's not as lucrative. So I thought, honestly, once I'm ready to retire, I don't know when that is, but that I would only trade those 6-week periods, because it's just easy. You come in at the close, figure out which ones you want to buy, you buy, and then the next day you either sell at the open or manage them. Now, I will talk about management, but not today, because it takes a little bit of time to go over. But anyways, that's the idea. Is you have a really strong stock that the day before earnings came in. That tells me people are bearish on it.
Right.
So that's the idea behind it, basically. Okay, that's the pullback pattern. Sometimes the pullback, I'll show you in just. And then this is the the pullback, but to the downside, meaning the stock is bearish and then counter rallied to the declining 20. You see what I mean? So it's bearish, and then investors are bullish on a bearish stock. That's a short. That's not a long. That's a short. Okay. Now, this is beautiful because you can see the 4-stage cycle easily. You can see that it was stage 1 right here, then transitioned and broke out. Now stage 2, and now stage 4. And yet, look at this. People bought it. 1, 2, 3, 4, 5, 6, 7, 8 or 9 green bars in a row into earnings, into the declining 20 on a bearish stock. So people are really bullish on the stock when it's really bearish, and you can see that it's in a stage 4 downtrend. So that's a short. I mean, doesn't get much better than this. That's picture perfect, totally, with an unfilled gap, partially unfilled. So amazing. And then sometimes you get like a double bottom, not just a pullback, but you get, so it's the same as the pullback, but with a retest. So it's like the W pattern, okay, or the M pattern if it's a short. So you get the initial counter rally, it retests it, and it's into earnings. That's a short. Okay. But anyways, here's the final pattern, and then I'll give you my checklist. It's still during stage 2 and stage 4, the uptrend and the downtrend, but stocks, again, sometimes they pull back, sometimes they go sideways. This is a base breakout. So you have a stock that's actually basing into earnings. That's a long. If it's really bullish and it doesn't have big green bars, it has either red bars or narrow range bars, that's a long. Okay. And then the next day you get the gap up. This is picture perfect. Totally. Okay.
Now, for the gap ups, you like to just sell at the open, or do you kind of say, hey, I'm going to sell a little bit now? Like let's say, for example, right? I've got 100 shares. It opens, gaps up in my favor because I'm long. Do you personally, your positions, right? How do you manage it? Do you just sell 100 right at the open? Do you say 50, then the next level? How do you play it?
I don't. So what I do is I wait for the first 5-minute bar to close, the 935 bar, and I put my stop under the 935 bar. And then as long as my stop is not taken, then I stick with the position until the end of the day. It's like FedEx. Remember I said, keep the back half until the end of the day because it starts to trend up, and it's exactly what happened. It didn't end up moving all that much, but basically I wait out the first 5 minutes. I don't do anything the first 5 minutes on 90% of all gap trades. And then I put my stop under the 935 low. As long as that stop doesn't get taken out. If it gets taken out, I'm out. If it doesn't, then I look to hold it until the end of the day. Basically.
Well, there you go. FedEx 5-minute chart. First 5 minutes, that's the low. Never broke it, and it marched on highs. So it makes sense because if you would have sold here, again, this is hindsight, but you just said what your strategy is. So you're kind of repeating it mechanically, no matter how you're trading it. And of course, we closed at approximately 2.16% higher. That's $600 if you had just 100 shares. So it makes sense. I like that.
Yeah.
Real life example, by the way, on yesterday.
Yeah. From yesterday, we traded it live. So we said, if the stock is basing and it's in a stage 2 uptrend into earnings, I'm going to look to play it long. Well, the same thing if it's basing and it's in a stage 4 downtrend, but in this case, I'd want to play it short. Notice, declining 20, people bought it into earnings. and then you have a breakout failure. That's a short. That's a short. That's a short. That's a short. So that's the idea, is if it's in a stage 4 downtrend and the stock starts to base into earnings that's not extended, either narrow range bars or green bars, I'm going to short it. Now, here's the 3-step process for the pullback plays for longs. So I want a specific type of trend in place, mostly just an uptrend, but it could be a transition depending on the chart. And then I want momentary panic selling before the earnings report comes out. This increases the probability of a gap up the next day because the expectations are really low. People sold it ahead of earnings. And I want that panic selling to happen at the rising 20. So here it is. Step 1, I want a bullish stock, bullish uptrend. That's a bullish uptrend. We can't argue about that. Stock is going up. That's a bullish uptrend. Okay. I want the panic selling to form, and I want it to form at or near the rising 20. That's 3 red bars in a row, at or near the rising 20. That's people selling it ahead of earnings on a bullish stock. That's a mistake. I'm going to capitalize on that. Okay. Next day, the stock gaps up, and I'm going to, initially I used to sell at the open, but now I know better. So I manage it. This was SE. Okay. That's the P&L for it.
Yeah.
These are not the biggest gaps, but I'm just showing you the strategy. So the 3-step process is I want a bullish uptrend. I got a bullish uptrend. The second thing is I want panic selling. I got it. And the third thing is I want it to be at or near the rising 20. And I want obviously the stock to be reporting after the close or the next day before the open. So you have to download the earnings calendar, and there's different sources, different websites. The best thing to do is to get it from a couple sources and then merge it together. So this way you have, because, like I use Finviz, I use Earnings Whispers, I use, a couple other sources, and they don't all have the complete list. So it's crazy. So I have to, I usually download it from a couple of places, and then I merge the earnings calendar together to have the most complete list. So I got the uptrend, I got the panic selling, and I got the panic selling to happen at the 20 MA. Next day, of course, gaps up, and then, that's the money. Notice again, that's more than 50% of the players probably lost money the next day, or about 50%. So I don't get it always right. But 2 things. The winners are usually bigger than the losers for me. Okay. The other thing is I've discovered how to manage the earnings plays. So that adds also to the pot. And so even though, that's 50% probably losers, 50% winners, I still ended up with $6,200 on the day, which is pretty good. Okay. So now, the 3-step process for shorts. I'm looking for a specific type of downtrend to be in place. I'm looking for a bear stock. I'm not shorting a bullish stock, basically.
Yeah.
And I want panic buying before the earnings report, which means people are bullish on a bear stock. That's a mistake. I'm going to capitalize on it. And I want that panic buying to happen at the declining 20 MA. So give you an example. And I picked GME because we know all about GME now. This is an old chart, but I just, for fun, I wanted to show you what I did with the GME a couple years ago. So stock was in a real bearish downtrend. People were buying it the day before earnings into the declining 20. Next day, of course, a gap down. So the bearish downtrend, the panic buying into the declining 20. Next day, the stock gaps down. I traded with like so that's $10,000, slightly more. It made $4,200 on $10,000 in the play. Okay, so that's GME. Here's I think my biggest play ever when it comes to earnings plays, at least, because I try to not risk that much because I don't know how much it's going to gap. I know on average it's 6%, 6.3. But this play, you might look at it if you to the untrained eye, this chart looks just like any other chart. Doesn't look that good, but it looked really good to me. So take a look. You got the unfilled gap, which I told you earlier is amazing. It tells you the stock is really bearish if there's an unfilled gap above current prices. If there's an unfilled gap below current prices, it tells you the stock is bullish. So I see that the stock gapped down a massive amount and was never able to rally back up and close the gap. That's a sign of bearishness. The second thing I see that I see a breakout on huge volume. And did the breakout work? It did not. So after this big volume, 20 million shares or so, more than 20, and it wouldn't work. So that tells me there's something wrong with the stock. So breakout failure. And I see that, now I have kind of a rounded top. So it's a big base with a breakout failure, right? With an unfilled gap. And people were buying it, panic buying into earnings, into the declining 20. So this one, wasn't a huge gap, but it made almost $22,000. 21,923. Notice on the PBYI, I lost 10K.
Yeah.
Almost 11. On the SIEN, I lost $8,600. So Yelp, I lost 5,000. So again, I don't get it right all the time. I get it wrong half the time almost. But I know how to make money still, even while getting a lot of the plays wrong, because I've discovered how to manage basically the earnings plays so that they're much bigger than the losers. And so that's CNDT, again, made almost 22K on it because I just loved that chart.
Yeah.
So, that's the strategy. I go in depth when I teach the course, the Earnings Engine course.
Mm-hmm.
I go in depth when I do the coaching sessions every Monday, but this is kind of what it is. Now, again, initially I was worried people would copy my strategy and it would stop working, but I'm not too worried. I'm not too worried. I've been teaching what I do I became lead moderator for Pristine in 2010. So I've been teaching for 14 years as a lead mod. So, and the strategies never stopped working.
Yeah.
And, what's the saying? Happiness shared is doubled, or, what you put out is what you get back.
Yeah. Yeah.
Happy to share it with you. I hope you benefit from it, whether you join me or not. Happy to share this with you. And, I wish you all the best with your trading.
Yeah. I'm going to share my screen here in just a second, but I wanted to kind of get a couple of questions in that the chat had, if you're okay with it. Elon, if you're still with us, I know you were looking for this one. Hey, Sami, is this swing after earnings strategy, regardless of the long-term trend of a stock? Cheers. Hopefully that question resonates with what he's asking.
Yeah. So no, it's not. Again, I'm not going against the long-term trend of the stock. I'm mostly going with it. So this was a short, right? This is, like I said, probably my biggest earnings play ever. The stock is in a downtrend. So I'm going with the trend, not against it. Yeah. The only time I go against it is when it's going climactic into earnings, and I rarely do that. I rarely do it. But most of the time, I'm going with the trend, not against it, okay?
Got it.
Sorry,
and then I think
one last point.
Yeah, please.
I am going against the short-term momentum, the panic buying. So it could be moving up the day before earnings or a couple days before earnings, yes, but I'm not going against the long-term trend. Next question, please.
Gotcha. Let me go ahead and bring the next one. So you talked, and I had one actually. You mentioned, hey, you're trading a bunch of different, a bunch of different companies. Are you kind of taking the same position sizing and like, hey, I know my risk is 6%, 7% every single time, or does it kind of depend on the chart that you may kind of alternate it? What's the thought process there?
So it is best to take the same position in every play, because if you start messing up with the share sizing, you're not gonna. Now it's hard to track, because now you're risking $100 on this stock, 1,000 on that stock, and it's gonna mess up your psychology. So it's best to actually share size the same amount for every stock. Now, after a while, you start to notice that, wait a second, yes, I'm supposed to have the same equal sizing on all plays, but this play is like, this is a once in a life. I mean, this is like so good. Can I cheat a little bit and oversize it? Yes, you can. But initially, learn the rules, then you can learn how to break them.
And I feel like tracking is a big part of that, because you just mentioned like 5 different patterns. You have different types of plays as well. And you got to track where it's like, hey, based on these type of plays, I've noticed that my profit is typically 2% higher. So I'm okay risking maybe 2% more, right? So you have to have a very business-like decision that you go ahead and make is kind of how I'm seeing it.
Exactly.
And again, so, chat, here's where we kind of show you, how you can get involved, how you can go ahead and kind of get some insights. And I know I've got a couple of different slides here showing. I tried to change that, but I wasn't able to. So here's what I wanted to kind of quickly go over, right? Is the Strategic Swing Trader newsletter, where you go ahead and get your top swing ideas every single morning, the entries and exits. This is really cool. It's kind of listed down to the penny. And here's the thing, and I'm actually going to go ahead and buy this course myself, and I'll explain why I'm doing it, and I'll explain how it's my money and all that here in a second. But my biggest thing, and I live a very busy life, or at least I like to tell myself that I live a busy life, is I don't have time to kind of do the research to be like, hey, which stocks are in play? Hey, where'd my stop be? Where would that be, right? I want kind of someone to be like, hey, here's the idea. Then I can say, you know what? I see what Sami is seeing. I can make my own educated opinion based on what you're kind of putting out. So you've got the newsletter includes the entries and the exits listed down to the penny. And of course, you have the live coaching every Monday as well. And of course, if life gets busy, you go on date night, you can go ahead and watch the recording as well. So that's kind of something that's kind of really cool. And then, of course, you also have 200 plus ideas that you mentioned. And this is really key to me because you're kind of spreading out your risk. You're kind of spreading out and diversifying your strategy as well. You're not saying, okay, you know what? If I'm going to make money, it's got to be on 4 of these, period, no matter what. So I love the fact that you have a lot of plays. Your emotions are kind of taken out of it. And you say, okay, cool. This is working with my risk appetite. It kind of works out. And of course, you've got that set and forget. The fact that you kind of take mechanical aspects to it, where it's like, hey, first 5-minute candle, got it. If it breaks this, I'm out. I think that's lovely, because then there's no, what do I do here? You already know. It's what you've been doing for quite some time. So that's kind of something that's really neat there as well. So the 1 year of the Strategic Swing Trader newsletter, typically it's about $12.95. But of course, because of this webinar here, and because you're joining us here on the Benzinga side, you can go ahead and get this one for $6.95, right? So you've got that discount there, and that's not just a 1 month price. Just want to be very clear. This is for 12 months. So that means, if I do the quick math, and I hope I really did it right, my mom wouldn't be proud, that's 4 earnings cycle that you can take advantage of. Especially, there's a reason we're doing this webinar here at the end of June, because in about 2 weeks, you're going to have earnings season kick right back up. And then you're going to have all those companies reporting, and you want to take advantage of it. And this is a great way to kind of do that there as well. Now, obviously, there's a lot more. You can see it on the screen that we have for you guys as well. So the first thing is you also get the legendary trading, the Pristine Method course as well. And this is what typically is about $800. You're getting, give me a quick little insight on what this is. Like, what can folks expect from this? If you can give me a quick 60-second breakdown on what it is.
100%. So trading the Pristine Method is the foundation. It teaches you how to take advantage of that basic unit, or the atom that I told you about at the start of the webinar. So it goes in depth. It teaches you the most common, why stocks move the way they do, and the most common patterns that form, because it's all based on group psychology. So they form and they keep repeating, and how to take advantage of them. So it's truly a gold mine. People just don't know it, but it teaches you how to read charts and how to take advantage of charts, of price action objectively. And then you can apply the Pristine Method to every tradable instrument, whether you trade. I apply the Pristine Method to crypto. I trade crypto actively, Bitcoin and Ethereum and Solana. So you can apply it to anything that is bought and sold in an open market.
Yeah.
And it just teaches, and any time frame, day trading, swing trading, core trading, long-term trading. So that's what the TPM, or the Trading the Pristine Method course, is about.
Got it. And Jay's Life, I think you had a question. Jay's Life talked about, hey, how can we kind of make sure that the benefit is there in terms of the pricing and all that stuff? So Jay, I saw your question. I promise I didn't ignore it. I promise you I will get to it as I kind of move along here as well. Now, you get that right again. Typically $800, but it's included in the $695 offer that we have for you joining this webinar here with Benzinga, which I appreciate you guys. And of course, the additional thing that you get is what Amber mentioned in the chat. Sami talked about it as well. And it's the live earnings engine class, where you dive deep into everything that you mentioned here already. Kind of, the appetizer, you now get the whole shebang on the 13th if you go ahead and join. And you also get the 6 proven earnings setups. You kind of dive in a little bit deeper into how that's going to play out. And that is also included in the $695 purchase as well. So just to kind of recap it, we talked about a lot of things. Typically $12.95, you get 1 year of Sami's newsletter, which I think is great. Just to have someone send in your inbox, hey, here are the plays that I'm looking at. Here's the stop losses. Here's the targets. And here's why I like it in terms of which setup it goes with. That's great to see. And you can kind of track it yourself as well. And then you also get the Pristine Method course, which you can go ahead and look at any time that you want. And then, of course, the biggest value to me is personally also the earnings engine course, because that's live. We get to kind of see what is happening in the markets today, not last week, not last month, not last year. It is what's happening today. And Jay, you kind of mentioned about the money aspect of it. And here's my biggest thing is a 30-day money back guarantee. We mentioned how, to me, any company that doesn't provide like a refund on something that they should, not something that I would kind of trust. It's just me as a consumer, right? So the fact that you're like, hey, you get these discounted prices, you get a chance to go ahead and take advantage of this. But if you're not happy, then we go ahead and get you the money back. And now maybe T3 will hate me saying this, but look, I am a consumer. I am Brown. This is how I think. Check out the course. It's $700. You get 30 days to see if you love it or not. You get a chance to be a part of the engines course, see if you like that. You get a chance to see Sami's newsletter. I know people in the chat were like, hey, what's Nike going to do? What's this going to do? What's that going to do? You get a chance to get insights. Did you send out any information on like Micron or any tickers or anything like that?
No, Micron. Yeah, I stayed away. Remember we talked about it? I wasn't going to do it. Yeah.
That's perfect. Yeah. So that's the thing where it's like, hey, there's some things that you may want to trade it because you're like, oh my God, the world is talking about it. How do I get in on this? But it may not be the best setup that you have. So why risk it? Because again, we don't really try to get in just to get in because others are. We do it because the best setups are there themselves. And I think, like I said, this is the best part about it. You can join Sami for 30 days as earnings season heats up. Again, the second half of July, but you also get to take advantage of the earnings engine live conversation that you'll be having as well. So we talked about everything that we have to offer. Now we'll kind of take a look at what previous students of Sami has said. The coolest thing is that you mentioned your co-moderator was someone who learned from you and now has joined you and has been able to kind of make money for a living doing this as well. Conversation, or I guess feedback here from Guru from Boston. If I could rate Sami 100 times greater than exceptional, that would be not sufficient enough. What do you think people like kind of love about everything that you're sending out? Is it the fact that, hey, your information is easy to digest, or like what's kind of like the big value you would say to folks that are giving such great reviews to you?
I appreciate it. Thank you. But really, the thing is, I'm not like one of those that always selling you stuff in hindsight. Like you get the plays ahead of time. The newsletter that you get every single day, that's plays that haven't even triggered yet. The earnings plays, I'm not showing you my P&Ls and telling you, oh, this is what I did. I'm telling you what I'm about to do. So people appreciate that. I used to do, webinars or, live streams with other educators. And my goodness, it gets annoying after a while that you're constantly hearing them say, "Oh, you could have done this, you could have done that. This is what I did with that." It's always hindsight, bro. Tell me what I can do next, not what I already did.
Yeah,
what you already did, you claim you did, and they show you no proof at all. And so I actually used to show my P&Ls every single week on YouTube, but then I became a director with T3 Live, and so for just compliance and safety, to be sure, they told me, okay, stop, please, even though I was making a ton of money.
Yeah.
But that's the reason. But I was actually showing my P&Ls on a weekly basis. Remember, I showed you that the video that I did, because that's what I was sharing with the students every single week. And then, but again, I was promoted to be a director at T3. So for just compliance and to be on the safe side, they said, okay, maybe shouldn't do that anymore.
Yeah. You got to make sure. And that's why we show what we had in the beginning. And, I'm trying to share a screen, but I want to make sure none of my private information is on here. Give me 1 second. Let me take a look at it. And I promise I will. But let me kind of go through this. And then Jay, Amber, I think is still in the chat. So Amber, if you could provide your email, I think if I had to guess, it might be, I don't know, Amber@t3live.com. I don't know, but oh, look at that. See, genius. But yeah, no, Amber, she can go ahead and reach out to you, or she can provide her information there. And kind of moving along as well, I think the coolest part is that no matter where you are in the world, I know we have some folks from outside the US. If you can go ahead and trade stocks, if you can go ahead and get involved in the financial markets in the US side, this is something that's kind of beneficial for you. And then the patience I think that you have is great. And you mentioned how outside of life, you're a bit more patient than you are in the market. I remember you said that yesterday as well. There is no doubt that he's become a mentor and a role model. And, you know, with this package that I want to kind of go ahead and bring up here real quick as well, is that you're getting, you know, kind of quickly recapping what all you're getting. You get the Strategic Swing Trader newsletter, where you get the exact system that helps Sami turn into a 7-figure trader. So instead of $800, that's discounted. You get the Pristine Method, which is a recorded. So you get that game plan every single day. You also get the weekly coaching sessions on that as well. So typically $1,300, that's discounted. And you also get the Earnings Engine live course, which again is going to happen in July. So you can take advantage of this offer. You can have the money back guarantee and see if it's worth your hard-earned money, which is about, you know, less than $60 a month. So that's great to see there as well. And then kind of just, you know, last final thoughts from you. I know we've got to kind of wrap up, and I wanted to share my screen here in a moment as well, but recapping it again, you get everything that we talked about, typically a $2,500 value. Today for you joining us, it's $695. And the best part of it all, outside of the deal, outside of the information that you get, is a 30-day money-back guarantee. That way you can have a peace of mind that says, hey, this was worth it. This works with my risk appetite. The information that's provided is worth me spending $60 a month. And I will say this, there are a lot of gurus out there that on FinTwit that say, oh, hey, you can join with this, join my Discord, join this, join that. And so many of them just buy the options, sell it to you on tweet, then it goes up and they sell it. It's just not transparent. Appreciate what you're doing, Sami. I'm going to share my screen here real quick, and then we got to get going because we actually are running this on .com, and that's going to run out as well. But let me make sure. I don't think there is anything that I don't want to make it very clear. I told you I would go ahead and join you, and I have, and this is my, you know, invoice number and everything. I was really hoping my credit card wasn't here. Hopefully it isn't. And here's why I'm joining, right? And I want to make it very clear. Benzinga is not paying me to join. T3 is not paying me to join. I'm joining with my hard-earned money. No one's reimbursing me whatsoever. This is going to come straight out of my credit card. I'm going to pay for it like I do with my grocery bills. But the benefit that I find is that I can get a newsletter from you that says, here are the stocks that I'm looking at. Here's the entries. Here's the exits. And also the course itself. And the third thing for me is a money-back guarantee as well. So I love what I hear. Man, what's up?
Yeah, so I actually don't like the money-back guarantee part because, you know, earnings season starts mid-July. So, and it doesn't really get going until the end of July, beginning of August. So make sure you're still around when the earnings season gets going at the beginning of August, end of July. Yeah. So, you know, so that's the only part that I don't like about it. Because again, earnings season, sure. Yeah. I think the official start date is July 13th, but it doesn't really get going until the end of July. So that's the part where
I appreciate it. Yeah. And that's where you know it's authentic. This isn't recorded. We get feedback from both sides. Sami, any final thoughts before we go? You know, let us know what you're thinking here before we head out.
Well, I loved being here with you today. I really hope folks join. I really hope I presented something new that you've never heard of before. And I really hope that it made sense to you, that it's, you know, was logical. So yeah, I hope to see you around.
Awesome. Appreciate it. One last time, if you want to get the package that we talked about here today, t3live.com/deal. You get all three things heavily discounted. You get a chance. And the main thing, again, you get a chance to watch Sami live in action as he goes through the Earnings Engine live course later on in July as well. Sami, what a pleasure it's been, man. Thank you so much for hanging out with me. And I look forward to doing a lot more with you.
Thank you. I appreciate it. By the way, Nike appears to be bottoming, so I may be playing it long on earnings.
See there. I didn't want to ask you because you had to change charts and all that stuff, but I appreciate
it. I didn't even know it was reporting, but I just looked at it and yeah, it's reporting. Looks kind of good long.
All right. Well, get the newsletter to get the information. Sami, thank you so much, man. We'll talk to you later.
Take care.